Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur and property investor. Today is the Halifax house price update and I wanted to bring that content to you as soon as I possibly could. This month is the first decrease on an annualized basis, so year on year, for over a decade for house prices in the UK. So 2012 was the last time we registered an annual decrease and now 1% down over the last year. But that doesn't tell the true story. And what I want to do today in today's video, I'm going to give you the raw figures. I don't find them that interesting, to be honest, because it's what we already know, okay? House prices on an annualized basis down about 1%. Month on month, about flat. And in terms of quarterly change, we're up about 1.3%. Remember, we had some big decreases, Q3, Q4 of 2023. I'm trying to remember what year we're in, 2022, yeah. So that's what really means that in the last quarter we've got this increase, however, hasn't made up for those decreases. We've got this annualized decrease for the first time since 2012. Now, in terms of HMRC, because we always go through that data, which is a little bit further on down the report, we've got a decrease in the number of sales taking place, about 7.9% decrease from the Bank of England in terms of mortgages, and a decrease in seller activity, according to RICS. So decrease, weaker market overall, decrease in house prices, quite obvious. Now, this is what I want to really get to though, because a decrease of 1% does not tell the true story. Not in my opinion, not at all. We've also had inflation of 10%. So if everything else has gone up by 10% on average and house prices have decreased by 1%, well, on an actual purchasing power basis, they've dropped by 11%. And that is why I think right now we might be looking at the greatest buying opportunity that we've had for quite some time. And it's really easy to dismiss the inflation story with, well, they've risen by 10%, other prices, however, wages haven't gone up that much. But according to the ONS, I've got it in front of me right now, wages increased by 6.7% from January to March 2023. That's a big increase, right? So we're actually looking at wages rising, we're looking at prices rising, we're looking at the value of the money you're being paid decreasing, and house prices staying pretty static, which means in real terms, they're decreasing. And they're down by about 10%. That's a big story because we're looking at rises of 21 to 22 of about 10%, 2020 to 22, 21, about another sort of 7 or 8%, something like that. So is today like the old 2020? Are we back to house prices being what I think incredibly good value for money? Well, I think we're getting there. The interest rate story for me is coming to the end of its story. Either they continue to rise a little bit, but affordability is catching up, certainly in the south of England. And I think that will be a story that will come out a little bit more. Oh, for fuck's sake. Tom, it's you. You keep texting me. Stop it. I can't remember where I was up to. Cheers, mate. Remember, we have our subscriber dividend portfolio, around about a 10th of every single month, currently about 14 grand in there. We're gonna be paying out the dividends every single month, and I'm adding another £2,000 every single month so that they grow and grow and grow, and we're gonna be able to take part in a passive income journey together. And I'm gonna be able to pay so much money back to my subscribers and hopefully inspire other people to become investors for the long run. It is one of the best opportunities for buying that we've had for a long, long time. Now, if I can also consider interest rates, because I think that's on a lot of investors and purchasers' minds. Interest rates are up, obviously, but rents are up as well. Like, I've just bought a house over in Sheffield, which 2 years ago would have rented out for £650. We've rented it for £950. That's a huge increase. And yes, my mortgage payment on that 120 grand house has increased by about £250 a month. Absolutely. But my rent's gone up by 300. It's completely covered, and the tax implication and everything else, by the rent rises. Because guess what? Capitalism kind of does that, doesn't it? Capitalism will find a way of equalising that market. Either landlords will sell up and move out of the market, meaning that rents will rise because demand is there and supply reduces, so rents rise based on that, or they will demand a margin. Of course you will. If you're a landlord, you're buying a buy-to-let investment, why would you not demand a margin? Of course you're going to demand a margin. The only reason you wouldn't is if the supply and demand mean that you can't. But in the UK, we know we've had a net deficit of building houses for decades. And this problem is getting bigger and bigger. It's not shrinking. There's a think tank recently that said it's going to be by 2050, even if the government hit all their targets, which they've missed every single year for the last decade, even if they hit all the targets, it would take till 2050 to get that deficit under control. So as far as I can see, there is going to be much, much more demand for properties and much, much more demand for rental properties, and prices just going to continue to rise. There will be a limit with affordability, of course. You know, I understand that. But when it comes to the bottom of the market, I think a lot of young professionals are being forced into HMOs. They're renting rooms. You're taking a single dwelling and you're turning it into 5 or 6. By doing that, you are helping the deficit of properties, obviously, because all these people couldn't be kicked out of that accommodation and put into single lets. There simply isn't enough housing. Not to mention the fact they can't afford it, right? Ultimately, I think across the spectrum, if you're looking at HMOs, energy prices starting to come down, interest rates still a problem, but margins are returning. Single lets, interest rates up, rents are up, demand's really strong, voids are virtually zero. Very little in terms of people missing payments because you can be very picky with tenants. Great opportunity. Service accommodation, strong demand. Now, I think there'll be regulation change, so I would stay away personally from service accommodation at the time being, especially if you don't have any other outs that are comfortable for you, and especially if you're doing it on a rent-to-rent basis where you've got a long-term lease agreement, because you could be stitched up for that in the long run. But the other strategies in terms of property, you know, I think there's great opportunity, and we could easily see a snapback the other way in terms of property prices because wages have risen. Now, you reduce interest rates into a slowing economy to get growth going again, I can see this in the future. Well, you're going to have a real positive effect on those asset values. So for me, today is a great opportunity to be buying. That's why I've recently bought one up in Sheffield. The margin's there, the capital appreciation opportunity's there. In fact, in Sheffield, although annualized in the UK, prices have dropped. Don't think that's happening in Sheffield. Sheffield's still going up, Manchester's still going up, Northamptonshire's still going up, Nottinghamshire's still going up. There's plenty of places where it's still going up. It's being dragged down by some of the southern counties. So I think there's still a great opportunity. And if you're interested in connecting with me, I always forget to tell people about this, but I've had some great calls this last couple of weeks. In every description, there's a link where you can book a call with me. If you want to, one-to-one, we can talk. It's absolutely fine. And I know there's a price on there, and I'm not trying to sell it to you at all. But if you want to, I want to have that option for me to be able to connect with people on a one-to-one basis. And I think they start at like 50 quid, so it's very affordable. I've made sure that it's incredibly affordable. So guys, that's my opinion when it comes to the UK property market. What's yours? Let me know down in the comments. This video, I am going to reply to every single one. Thank you so much for watching, guys. Big likes, subscribe if you haven't already. See you on the next video. Cheers, guys.